NBIS is showing a decent amount of post-earning strength within a longer-term bullish trend. It's 200. It's a 200-day moving average, which underscores its underlying trend. As you can see, this one is sloping bullishly upwards. It has a fresh set of upper projections: 101.12, 111.66, double one, 118.18. Okay, there's no guarantee it's going to print those, but at the same time, the extrapolation of its 3-day moving average saying that it's not going to test those prices. It's saying that the downtrend that began on the 19th of January is expected to remain in place. So this strength it has just shown since it showed the strength from the 12th. Yeah, 12th. So that was it showed a two straight session of gains. It's just saying that it's not going to hold. It's going to continue to decline. But in any case, we have the algo seems to be it seems to be the algos on the 10-day moving average is indicating that volatility is what may play out. So you can see here it's not level, it's not a flat, it's volatile. So this may or may not be what may happen. It might it might defy this extrapolation and continue to advance and at various times do other things. So this there's an indication that in the coming days it may not be what we are looking at right now. That may not be what may happen. Let's just see what we have on its weekly chart before we move on and hear what the analysis is. On the weekly chart as well, lower prices are expected to continue to play out, especially towards the 13th of April. Nothing to the upside. Projections are saying it's 8.42, nothing at all to the upside. Underlying trend is strongly bullish on the weekly chart. Yeah, volatility is also what is expected as well on the stock. Yeah, especially up till the 8th of June, volatility is what is expected. So let's find out what's going on with the stock, especially with this post earnings bounce that has printed and see. Let's see.
Nebius Group NBIS Post Earnings Analysis. Earnings Release Overview. Nebius Group released its Q4 2025 financial results on February 12, 2025, before market open, delivering a mixed but ultimately encouraging report that triggered a volatile 2-day trading pattern. The company showcased extraordinary revenue acceleration while simultaneously announcing massive capital expenditure plans that initially spooked investors before confidence returned. Key financial metrics. Revenue performance. Q4 2025 revenue reached $228 million, representing a staggering 547% year over year increase. This explosive growth was primarily driven by surging demand for the company's AI infrastructure and cloud computing services. The revenue figure significantly exceeded analyst expectations and demonstrated Nebius's ability to capitalize on the AI build-out cycle. Profitability milestone. The company achieved its first positive adjusted EBITDA in Q4 2025, marking a critical inflection point in its financial trajectory. This operational profitability milestone was reached despite the capital intensive nature of data center and AI infrastructure businesses. The company still reported a net loss on a GAAP basis, reflecting heavy depreciation, amortization, and interest expenses associated with rapid expansion. Capital expenditure strategy. The most contentious element of the earnings report centered on Nebius's aggressive expansion plans. CapEx guidance. Management projected total capital expenditures of $16 to $20 billion for upcoming expansions. This substantial investment program is designed to build out AI optimized data center capacity to meet contracted demand. The magnitude of the spending initially raised concerns among investors about cash burn, dilution risk, and execution challenges. Infrastructure build-out. Nebius has secured contracted power capacity exceeding 3 gigawatts across its global footprint. The company operates or is developing 16 data center facilities worldwide. This infrastructure positions Nebius to serve hyperscale cloud customers and AI workload requirements. Strong forward indicators. Several metrics highlighted in the earnings release ultimately convinced investors that the CapEx investment was justified. 2026 annual recurring revenue guidance. Management raised 2026 ARR guidance to $7 to $9 billion, a substantial increase from previous projections. This guidance range implies continued triple digit growth and demonstrates strong demand visibility. The upward revision suggested contracted customer commitments support the aggressive expansion plans. Customer prepayments. Nebius disclosed over $1.5 billion in customer prepayments on its balance sheet. These prepayments provide non dilutive capital to fund portions of the build-out and validate customer commitment. The substantial prepayment balance reduces financing risk and demonstrates that customers are willing to pay upfront for guaranteed capacity. Hyperscaler contracts. The company has secured contracts with major hyperscale cloud providers, though specific names were not disclosed. These relationships provide long term revenue visibility and anchor tenant economics for data center facilities. Hyperscaler partnerships are viewed as validation of Nebius's technical capabilities and competitive positioning. Market reaction and trading activity. The stock experienced a notable 2-day reversal pattern following the earnings announcement. February 12th, earnings day, shares initially declined as investors processed the $16 to $20 billion capex announcement. Concerns centered on the company's ability to finance such aggressive expansion without significant dilution. Questions emerged about execution risk given the tight timeline for data center construction and equipment procurement. The market appeared to focus disproportionately on the spending requirements rather than the revenue opportunity. February 13th, Recovery Day. NBIS shares surged 8.48% in a strong reversal rally. Trading volume spiked significantly above average, indicating institutional repositioning. The recovery reflected a reassessment as investors digested the full earnings package, particularly the raised ARR guidance and prepayment disclosures. Analyst commentary likely shifted positive as the revenue visibility became clearer. Investment thesis evolution. The earnings report and subsequent price action crystallized several key elements of the Nebius investment case. Bull case strengthened. The company demonstrated that AI infrastructure demand is translating into actual revenue and customer commitments, not just hype. Prepayments and contracted capacity suggest high quality, sticky revenue streams with low churn risk. The path to sustained profitability became more credible with the first positive adjusted EBITDA achievement. Nebius appears well positioned in the AI infrastructure value chain, capturing spending from both hyperscalers and enterprise customers. Remaining concerns. Execution risk remains elevated given the unprecedented pace and scale of the build-out. Supply chain constraints for GPUs, networking equipment, and power infrastructure could delay deployments. Competition is intensifying as traditional cloud providers and new entrants expand AI specific capacity. The net loss position means the company will likely need to access capital markets for debt or equity financing. Competitive positioning. Nebius operates in an increasingly crowded AI infrastructure market, but has differentiated itself through geographic diversification with 16 global data center locations, reducing concentration risk, secured power capacity of 3 plus gigawatts, a critical bottleneck in the current environment where power availability often determines data center feasibility, demonstrated ability to win hyperscaler contracts, suggesting competitive pricing and service levels, and early mover advantage in certain markets where AI specific infrastructure remains scarce. Forward outlook. The ultimate positive reaction to the earnings report suggests investors are betting on Nebius's ability to 1. execute the $16 to $20 billion build-out on schedule and within budget. 2. Convert the raised $7 to $9 billion ARR guidance into actual realized revenue in 2026. 3. Maintain or improve adjusted EBITDA margins as the business scales. 4. Secure additional customer commitments to fill the expanded capacity. 5. Successfully navigate the financing requirements without excessive shareholder dilution. The 8.48% surge on February 13th indicates that concerns about near-term capital intensity were outweighed by enthusiasm for the company's growth trajectory and the validation provided by customer prepayments and hyperscaler partnerships. The elevated trading volume suggests institutional investors are actively building positions based on the thesis that Nebius represents a leveraged play on AI infrastructure spending. Conclusion. The post-earnings price action for NBIS exemplifies how markets can initially react negatively to large capital commitments before recognizing that such investments may be justified by revenue visibility and customer demand. The company's ability to secure $1.5 billion in prepayments and raise 2026 ARR guidance to $7 to $9 billion ultimately convinced investors that management is building capacity in response to real customer demand rather than speculative build-ahead. The next several quarters will be critical in determining whether Nebius can execute this ambitious expansion while maintaining financial discipline and competitive positioning in the rapidly evolving AI infrastructure landscape.